You know, when it comes to trading, the real game changer isn't about just making money, it's about how you make it. And I believe to be a consistent and disciplined trader, you need some sort of trading plan or a routine that you will actually stick every day, every week, and every month. So that's why in today's video, I thought I will do something different. You know, no fancy indicators, no strategies, just me sitting down and explaining to you my exact trading plan that I have been following probably for the last 3 to 4 years. And in result, I just hope that you will find some golden nuggets in this video that will actually help you in your own trading journey. Okay, so let's actually get straight into my trading plan, and I'm going to guide you through each of the section, basically explaining how I approach every single step. And then of course, to bring this into the life, we're gonna go through the example of the recent trade I took with my VIP members. So at the very top of my trading plan, I have this section called pre-market analysis, and essentially what I do, and every single trading session of mine starts the same way. So I will go ahead, and the first thing I do is I jump on fxtraderkristina and I will see what is the news that are scheduled for the day. Because as you probably know, the news like GDP, non-farm payrolls, retail sales, CPIs, they move the market a lot. And that is why it's super important. If you know what's going on in the world, you can kind of figure it out how it might affect your trades. So for example, me personally, I want to know if today is the day that maybe I need to, reduce my risk, or at least wait for the news to pass before I consider entering my trade. So for example, I usually trade when the London-New York session overlaps, and let's say I'm looking at Euro-US dollar for a potential buy opportunity. But then I know there is a GDP or retail sales news coming out very short within my session. So what I might do is I probably would wait it out for the news to pass and see how the market will react. Because to be honest, one moment you might have an A+ setup, but then the next minute the news will kind of destroy it. So that's why it's just so important to keep an eye out on economic calendar, because you will see how the market will react, so at least you can kind of plan it out. So moving on from the news section, we have the part called market scanning, and this section kind of connects very nicely to the one called criteria for selecting the pairs. So what I essentially doing here is I'm searching for currency pairs that show a clear and consistent trend across multiple time frames. So as you can see, monthly, weekly, daily, and 4-hour charts. So I'm just basically scanning through all the pairs that match this criteria, and additionally they must be trending above the 20 and 50 moving averages, ideally above 200 as well. So once I pinpointed the currency pairs that align with my trend and the moving averages, the next thing I do is I narrow it down just to 1 or 2 high quality setups. So you're probably wondering, why just 1 or 2 when there's so many? Well, because in trading I have learned that less is often more, and I prefer quality rather than quantity. And I feel like if you are all over the place, trying to trade 10 different pairs at the same time, at the end of the day, you're gonna be exhausted, then you're gonna be over trading, that's gonna blow your account, and you don't wanna trade anymore. So what's the reason for you to trade 10 different setups when you can find one high quality? Because at the end of the day, I want to put all of my efforts, all of my knowledge, my time into those 1 or 2 setups that I know will pay off, rather than chasing every single possibility. So after I have chosen the best setups, the next thing I do is I move to my next section, which is technical analysis and markup. So the first thing I do is I focus on identifying the key support and resistance levels along with the trend lines. So starting from the monthly down to the 4-hour charts. And this will basically help me to kind of create that base and see where the market might react or kind of change its overall direction. Now, I will not go in extra depth on how to draw support and resistance levels, identify trend lines, and any chart patterns, because I made a video about it. So I will leave a card just over here, popping, so you can go ahead and watch it later if you want to. So once I establish these key levels of support and resistance, trend lines, all that kind of stuff, the next thing I do is I plot my monthly and weekly pivot points from the Baby Pips website. So let me quickly show you how I would actually use the pivot points in my trading. So this is AUD JPY on the monthly chart. So as you can see, I have S1, Central, and R1 pivot points added to my chart. So what I would do next is I would actually grab this distance measure tool, so price range one, and I would measure how many pips there are left from the current price to the next pivot point level. So for example, there is still around 83 pips left that I could potentially profit from. And I really love using these pivot points because they can actually tell you where the market might be reversing. Okay, so the next section we have is called candlestick patterns, and this is where I will go ahead to the 4-hour chart and I will see what kind of formations are forming and whether they are closing above or below the 20 and 50 moving averages, and that of course depends on whether I'm buying or selling. So once I'm done with technical analysis and all the markups, the next thing I do is I move along to my risk management and trade execution section. So I usually enter on the 4-hour candlestick closure. So let's say I have my entry ready, the candlestick has closed completely above 20 and 50 moving averages. So the next thing I will do is I will place my stop loss of 80 pips and I will aim for 160 total profit target, which basically leads to 1-to-2 risk reward ratio. Now, as I said, I'm using this trading plan for 3 to 4 years, and I really worked it out that using 80 pips stop loss, and additionally, I love my stop loss being covered by multiple moving averages. And I believe I've said this many times in my previous video, but I will say it once again. I really like my stop loss being covered by them because this is like an additional security, because as you know, the moving averages, they act as a dynamic support or resistance. So whether you are buying or selling. So I really love to include them because if the market will break one of them, at least I will know how to manage my trade. And of course, I strictly adhere to risking only 1-2% maximum of my capital on every single trade, and this percentage works well for me. But of course, it's very important to remember that what works for me might not work for everybody else. So I'm just basically sharing what I found to be effective to kind of preserving my capital and keeping my trading sustainable over the long run. Okay, so before we move to the last section, which is post-trade management, there is one thing I haven't told about. So this is called trade limitation. So I take only one trade per day, and if the market conditions doesn't align with my trading plan, I will not enter the trade. I will never force one, and many of my VIP members know that if I cannot find a good opportunity that is worth taking, I will not take any at all, and we always wait for tomorrow. Okay, so we finally arrived at the last section of my trading plan, which is post-trade management. So the first thing I do when I enter the trade is I set alerts on TradingView for my take profit levels and key reversal levels such as pivot points. So if let's say I have been analyzing the market probably for the last say 2-3 hours, I don't want to be glued into the charts no more because I put my energy there and now I kind of want to set and forget. So if let's say something is going on in the market, I will be notified and I will go to my MetaTrader and I will manage my risk accordingly. Okay, and the last one we have over here is monitoring and adjustment. So let's say my trade that I entered reached the first take profit level. So what I will do, I will go to my MetaTrader and I will take partial profit. So it could be around 40-50% of the actual position, and I might leave the rest running. I usually sometimes don't touch my stop loss at all, or sometimes I might move it to break even, but once again, that depends on the market conditions. Okay guys, so now that we have covered pretty much everything of my trading plan, you know, from the initial analysis to post-trade management, let's actually bring it all together and I will show you a trade of AUDJPY. That's the one I took on 18th of January with my VIP members. Okay, so this is the monthly chart on AUDJPY and we can clearly see that the price action is in a nice uptrend because it's just simply making higher highs and higher lows every single time, which is a classic sign of a bullish trend. Now, moving on, we have the moving averages, which are also sloping upwards, especially as you can see the moving average of 20. It's acting as a strong dynamic support because it actually never broke below it. And as you can see, the price is currently sitting above the central pivot point, and as you can see in the last 4 months, the price never really closed below the central pivot point. It was always rejected by this support level just over here. Okay, so this is the weekly chart of AUDJPY, and this is pretty much the same scenario. We see a strong bullish momentum. The price is also closing above the weekly central pivot point, which just further reinforces bullish bias. Okay, so this is the daily time frame, and as you can see, pretty much the same as on the monthly weekly, we have a nice and strong bullish momentum. The moving averages are trending below, and we can also see how this candlestick is being rejected by the daily uptrend and 20 and 50 moving averages, and also closing above the weekly central pivot point, as I mentioned before when we were on the weekly chart. Okay, and this is the 4-hour chart, so this is where I would enter my trade. So as you can see, the price was nicely rejected by that daily uptrend. My stop loss is being covered by 3 moving averages, so 20, 50, and 200. And as you can see, I have bullish engulfing candlestick closure just over here forming, which would actually be a new high as well. Okay, so I forgot to draw another level on my chart, but this level just over here is the weekly high. So if I would go back to the weekly chart, as you can see, this level over here was the highest point reached during the week. And it's always good to know where these levels are, because as you can see, the price touched this level and then pulled back down before actually reversing back to the bullish side. So I always mark these levels as well, because it just basically helps to manage my risk more effectively, and I know where to take more profit because the price can actually turn back around. Okay, so if I will move forward bar by bar, we can see how the price pushed towards the upside before it was actually rejected by this weekly high, as I mentioned before, because as you can see, it has multiple rejections, so it clearly stands as a resistance level. But at the end of the day, I believe I was still able to rock around 70 pips into total profit, because if I would turn this replay to on, the trade is still actually live. I haven't fully closed it yet, because as I said, I'm a swing trader and I will wait for the Monday for the market to open, and I will kind of reanalyze the whole AUD JPY setup, and I will decide what to do with my remaining position. Now, for some of you, 60-70 pips is not enough, and that's absolutely okay because everyone has their own needs. But this example is different to what I have shown before. You know, many trades and in many videos I have shared my setups that reach over 160 pips, and they do reach following my trading plan. But this is just different, you know, trade that I just wanted to tell you and show you guys. But you know what, I always love to think like this as well. So if my trading plan is followed, everything aligns with the market conditions, and if the market decided to give me 60 to 70 pips per day, I will take that any time of the day, because why not? At the end of the day, I still made a good and profitable trade. So as always guys, if you enjoyed this video, then definitely let me know in the comment section down below. Drop me a like and I will make sure to make more of this content. And yeah, if you want to watch more of my videos, I will leave just a card over here so you can click on it and watch it more.